Hello, everyone. Today on the final bar, we will set the stage for a fairly aggressively busy earnings week. We have Tesla coming out after the close here today on Monday, and then most of the FAANG stocks, lots of industrials, healthcare, everything coming out through the course of this week. This week is going to be about earnings, how these stocks are trading leading up to the announcement, how investors treat them afterwards, all about the anxiety, the anticipation, and then processing it afterwards. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we look at these markets together, focusing on the message of the markets themselves. As we process earnings season, as we deal with all of these companies reporting what has happened and giving comments about what should or could be coming next. We're left to question, what is the point of charts during this sort of environment? I'm often asked about the point of using charts during earnings. I would argue this is an optimal time, because if charts are telling you about the collective investor psychology, all of the thoughts and feelings, the fear, the greed embedded in the price based on investor behavior, then it's a perfect time. This tells you how investors are treating a stock leading up to the announcement. Are we excited? Are we nervous? Are we desperate? Are we optimistic, pessimistic? That all will be reflected in the stock price. And then coming after, how do we deal with a company that misses earnings or that beats earnings, and what surprises are baked into the numbers, and what can the chart tell us about expectations going forward? All of that reflected in the stock price. Now, we have great guests on the show, as always. We had a couple of really good discussions last week. Guys like Sam Stovall and others. It's really awesome to have them on the show this week. More of the same. Tomorrow on the 27th, we have Todd Sohn from Strategas in New York. On Wednesday, the 28th, we have Joe Duarte from Joe Duarte in the Money Options.com. Joe actually wrote the book, Trading Options for Dummies, or Options Trading for Dummies. And he's a frequent guest on our channel. I'm excited to hear how he's approaching this. We're at unprecedented, obviously, growth and interest in the options market for sure. Also, I just wanted to mention, coming up next week on Tuesday, May 4th, I'll be doing a special webcast called Sell in May, 5 charts you need to review. If you're interested in that, focusing on the seasonal trends in the market, but particularly what the market is telling us leading up to the seasonally weakest part of the year, May through October. Join me at that webcast. You can go to marketmisbehavior.com/sellinmay to sign up. I'd love to have you join me there. Let's continue on with the market recap. And as I'm getting ready and starting the show, my producer reminded me, Wednesday Fed meeting. So we've got, on top of all of the earnings, we have language from the Fed. If you think about the relative importance, as we look at some of the charts here, the returns today, look at the relative importance of what the Fed comments could do versus earnings. I would argue in a week like this, where it's such big earnings content, I think, earnings from Apple and Tesla and Alphabet and Facebook and Amazon and Twitter, those are things I'm going to, and on top of all that, things like Caterpillar, Merck, big pharma stocks, these are all reporting this week. So I think the message from those earnings releases and what stocks do afterwards, right, through the course of this week, I think is going to tell us a lot about the trajectory going forward. I don't see the Fed making huge changes that would impact the market. Of course, having said that, that's certainly what we could expect on Wednesday. So we'll be ready for that for sure. Let's get to the market recap. The S&P, essentially chopping around much of the day, finished up about 0.2%, but not a huge mover. The real gain today on the index level was from the NASDAQ. So the NASDAQ 100 up about 0.6%, the NASDAQ composite up about 0.9%. The Dow Industrial is actually down. So it's interesting. If you look at the day today, S&P kind of flat, choppy, the NASDAQ appreciating through the course of the day, the Dow depreciating through the course of the day and ending down around 2%. So these are not huge numbers. This is not a huge change, but sort of this bow tie day with, one of the indexes gaining, one of the indexes losing. This has been a signature pattern in recent weeks. And I think, when I'm looking at this market, even though we're making new all-time highs, and I say, it just feels more indecision-like, digestion-like. That's the kind of thing that I'm seeing that validates that, right? And we're not all agreeing what the market is doing. It's sort of chopping around. Mid caps and small caps actually outperformed today, gaining more than the S&P. And the VIX is actually a little bit higher today, still below 18 though. Fixed income markets essentially flat. There was a bit of a move out of the open looking at the 10-year yield, but overall really netted out to essentially a zero, and the TLT essentially flat as well, the dollar flat. So, this is really sort of an understandably muted day when you look at what's coming through the remainder of the week. I think everyone's sort of cautiously waiting to see how things play out. I think by the end of the week, we'll have more clarity about where the market may be headed next, and are we continuing this long-term uptrend? Where we are continuing to see strength is in precious metals. So gold up about 1/4%, silver up a little more. As I'm going through my weekly process of going through a bunch of charts, gold Newmont mining actually looks pretty decent right now, which is kind of a funny thing to think because it's coming off of a series of months where it's been just weak, right? I mean, relatively weak on an absolute basis, but starting to improve a little bit. We'll see if we can get to that when we get to our shifting stock segment here in just a bit. Finally, cryptocurrencies up pretty big, and there's a lot of choppiness. And then going into this morning, you had Bitcoin coming off last night and then just really rallied. So it started the day here. If you think of the trading session for Bitcoin around 49,000, currently up around 54,000, so up about 10%. Cryptos are up across the board, sort of this de-risking over the weekend now, maybe stepping back on the accelerator and pushing things a little higher. On Friday's show, we did our Wrap the Week segment where we focused on the long-term trends using the Mindful Investor live chart list. If you missed that, I would certainly encourage you to go back on our YouTube channel or on StockCharts TV on demand, because that's a really good sort of systematic walk through some of the key charts out there. I would, just a couple observations to make at the macro level as we finish the market recap today. Number one, when I'm looking at the chart of the S&P, again, the S&P continues to make new all-time highs. We made a new all-time high today. When that is happening, you should not be too negative on things. Overall, that's fairly constructive, which is pretty positive. When I'm looking at the trend lines, this is sort of an interesting development where you had a first trend line here that was broken in late January, a secondary trend line taking that new swing low, which was broken in February, and then the third trend line taking the low from March is kind of that final trend line. It's rare that you don't keep doing this forever as you keep breaking these trend lines. After the third one, that's usually it, and then that indicates enough of a rotation lower. But we've spent so much time in this uptrend that this trend line is actually down around the 50-day moving average, just below 4,000 right now. So 4,000 sort of becoming a pretty interesting level. It's actually the swing high from mid-March, right around the same point that we're at. So given if we would have a big distribution, number one, I would look for the lows from last week to be the first line in the sand. As long as we remain above that, there's nothing to be concerned about from a technical perspective. But if and when we would break that, I think that's where I would be looking for support. At this point, though, it's all about where things go. Looking really quickly at the news, so it looks like Tesla beating at top line and bottom line earnings estimates. So that certainly could provide some upside potential here going forward. I don't know if you know this or not, because as we're doing this during earnings season, if you bring up the symbol summary page, we actually show the after hours trading right on this page. We'll show that live after the close. So as you're processing these earnings and as you're trying to make sense of what's happening after the close, one of the best places to look at it on StockCharts is just go to the symbol summary page, type in the ticker. It'll show you the normal trading session close. So Tesla was up 1.2% at this point. Just after the release, Tesla's up about $6, 0.8%. It's a great way to track how things are reacting to earnings on the fly as things are going. That's it for our big picture segment. Actually, that's not it. I just wanted to show one more thing as I was thinking about it, which is looking at the big picture. The big picture that we talked about on Friday that I would reiterate. Number one, the 10-year yields. That's not the chart I wanted. The 10-year yields, two charts I would pay attention to, sort of the big picture. Number one is the 10-year yield. It's pulled back to the 50-day moving average. And I think, from a technical perspective, this is a really decent place for interest rates to turn higher. We've sort of pulled back to this point. The 50-day moving average down to 150, which would be the 38.2% retracement, is a really logical place for yields to bottom before they rotate higher. Banks, as we're going to see here in a moment, all doing pretty well. The financial sector actually setting up beautifully on the long-term charts. So that's one thing to look at. Gold, we're going to look at the chart of Newmont here in a little bit, but it's worth noting that gold is broken above trendline resistance. The GLD breaking higher. Gold stocks, mining stocks, doing pretty well also. So two interesting macro charts, gold and the 10-year. I think an important time to be following those charts and see how they evolve. Continuing on, we've talked about the big picture, talked about the overall strength in stocks. It is undeniable that from the standpoint of price and breadth, stocks are in a very healthy place. Our market trend model remains positive. Sentiment would be the one that is, just has been giving euphoric signs, all-time lows on bearishness from the AAPL survey, all-time low reading in the Ridex flows, which is actually sort of a contrarian sell signal. Let's now continue and go through some of the sector rotations. And we're looking at the weekly RRG to start with. Julius DeKempener, host of Sector Spotlight on StockCharts TV, created this visualization years ago, and I've used it for many, many years, and thrilled we have it here on StockCharts. When you're looking at the weekly RRG, this is a general sort of 30,000-foot view on how sectors and other assets are rotating around a benchmark. So if you're looking at the 11 sectors, they're rotating on a clockwise way, generally speaking, around the benchmark. Here in the middle, the strongest are the ones furthest to the right. So the strongest long-term trends have been energy and financials. But if you look at which way they are trending actually southwest, the direction of deterioration. The XLE, the energy sector, for the first time in a long time, is actually out of the leading quadrant and is in the weakening quadrant, which shows you that the trends overall have still been positive, but the momentum is actually decreasing. So it's less and less impressive every week. And the fact that it's rotating there is a bit of a concern for the long term. And if you look at the chart of a lot of the energy sector, there are things that are doing okay, like pipelines come to mind, things like Kinder Morgan, but overall the average stock has pulled back to a great deal. And the question is, are they able to hold those pullback levels? And not to jump around too much, but when I'm looking at something like FAANG, that's the chart that maybe comes in my mind, right? This is a stock that had a pretty good run, outperformed. That's changed in the last 6 weeks as FAANG and others have pulled back. Now hitting an ascending 50-day moving average. This is the decision point. Does the 50-day hold? Does it rotate higher? Or do we break our swing low from March and continue this downside trajectory? I don't have enough information yet to tell you from a technical perspective which way that goes. I would say overall, I think if I had to guess which way these are going to break, I think they'll continue to go higher. And again, maybe I've spent too much time with Greg Schnell, who's sort of my favorite expert on energy and natural resources. But overall, I get the argument this is a long-term pullback. Overall, really haven't violated any lows, really haven't broken down through the 50-day. Seems to be holding okay. If that continues on to a next leg, you could see energy certainly reemerge in a position of strength. But at this point on the long-term rotation, not so good. What is improving on this on the weekly RRG? Material stocks, industrials, that's the XLI right there, and real estate. These are three that have gained the leading quadrant here in the last couple of weeks, indicating some improvement in their relative profile, not weakening in the momentum as you see with energy and financials, but actually improving. And it's funny, when I'm looking bottom up and looking at hundreds and hundreds of charts, REITs don't look that bad. We'll look at a couple of those if we have time here in a minute in our shifting stock segment. What does not look good? It's things that are rotating sort of to the southwest. So technology, consumer discretionary, overall pretty underwhelming. Healthcare has been improving, but it's been so relatively weak. I would say there are pockets of healthcare that look much stronger than others, but on average, the big pharma names, big biotech names are a big weight in the healthcare sector, and overall have been weakest by the fact that it's on the farthest left side of this. Interesting to see consumer staples that are improving here as well, by the way. A lot of those stocks actually gave some back here in the last couple of days going through today. Consumer staples might have been the weakest sector today. It was and down while others were certainly improving. But overall, worth a look to see if there's some opportunistic stock picking you can do along the way there. Second step after we look at the RRG chart is to look at the 11 S&P sectors using the candle glance page. Here's where we can start to look at them all together and make some relational discussions, sort of relating these different charts together. So here you can see the pullback in staples. Again, I know this is zoomed out, but you can see the little pullback that we saw here today in the XLP. And again, it's worth noting that this trend overall is not broken yet. This could just be a very reasonable pullback within a in a long-term uptrend, but it's worth noting it's certainly coming down. And I think the most concerning thing about staples, again, it's not that the charts overall in the sector are horrible. However, it's certainly concerning that it's making potentially a new multi-year relative low this week. If we continue a little bit lower, that's all it would take to trigger a pretty long-term negative pattern there. Now, what is working? I should point out, here's the XLE. I mentioned the energy sector and some of those. I looked at FAANG, which had pulled back to its 50-day. It's worth noting that a lot of energy stocks actually have not held their 50-day, and that's certainly a concerning breakdown, right? So the XLE itself has broken down through the trend line using the swing lows. If you look at this as a head and shoulders pattern, that's been broken, and it's indicating more of a sell signal versus a buy signal. And so again, you'd have to see improvement. A higher low on any of those charts would certainly make it a much more constructive pattern than what we've seen, making new swing lows. What is holding up really well? It's things like industrials, materials, certainly technology, real estate. And if you look at some of these are ones that are sort of the long and strong up and to the right. Others have had hiccups. Others are sort of pulling back and sort of checking where they're at. But those are the sectors that overall are sort of in a long-term trajectory. It's interesting to note, if you look at the colored arrows that I have on the chart here, this is the XLK going into the September 2020 market consolidation. You can see from there, the tech sector was basically the market with a relative strength line that is flat. Then look at how that changed from mid-February to the end of March, which is when it's underperforming. This is when technology is pulling back and other things are starting to work. And now you've seen a reversion higher. You've seen the XLK making a new all-time high or very close to that here today. And you can see that the relative strength line actually starting to improve in the last couple of weeks. So again, this week we're getting a number of these big cap, mega cap names in the space, Microsoft, Apple, and others reporting earnings. That could certainly be the catalyst to push that sector to continued relative outperformance, continued strengthen the NASDAQ versus the S&P. All of that could certainly happen. Or these companies have disappointing results, underwhelming investors, and that all of a sudden causes a stall in this potential renewed uptrend in technology. A lot of interesting themes, playing out today on the sector charts. As always, I would be leaning into things that are working and leaning away from things that are not working. When we come back from the break, we'll look at shifting stocks and we'll focus on some of the actionable charts that I'm seeing right now. See you after the break. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. It's great to have you join us every weekday after the close as we look at these markets together, focusing on the charts. I would argue, given anything that's happening in the world, even if it's technical or not technical, the chart should give you a sense of what investors are thinking or feeling about a particular name at a particular time. As a reminder, we love to hear from you. We'll do a mailbag segment on Tuesday's show. We'd love to answer one of your questions on the air. Shoot us an email with any questions that come up in your own analytical process. Our email is thefinalbar@stockcharts.com. We are on Twitter at FinalBarSCTV. You can also put a comment on our YouTube channel just below the video that you're watching. We'll gather all those questions, hope to answer one of your questions in our next mailbag segment on Tuesday. Also, as a reminder, StockCharts TV on demand is ready and available for you at any time. Go to stockchartstv.com, use your email, set up a free account. You can access all of our content featuring our great hosts, our great guests, and all of our educational and informational content. stockchartstv.com to set up a free account. We're also on all the app stores. Just search for StockCharts TV on demand. As we're going into our shifting stocks segment, and stocks are shifting real time here in the aftermarket as we're recording the show. Tesla has reported, as people are digesting the earnings report, it's gone from up about 0.8% to down 1%. So we'll see how things play out here in the after hours and what that might mean for the remainder of the week. Again, today's a lighter day relative to the next couple days. And so as we're thinking about the earnings calendar, I'd encourage you. I have one of the stock traders almanacs. Jeff Hirsch does such a fantastic job with this, and his father, Yale Hirsch, really pioneered a lot of the seasonal tendencies and expectations that we take for granted. It was Yale Hirsch that sort of pioneered a lot of that, and Jeff Hirsch does a great job with the almanac every year. I actually use the almanac to jot down companies that are reporting, and I circle the things that are important. I have a lot of circles on a lot of days today. Today, Tesla certainly coming after the close. Tomorrow, we have Microsoft and Google. Wednesday, Apple and Facebook. Thursday, Amazon and Twitter. So most of the FAANG stocks either reported last week or coming up here this week, and certainly some interesting ones, but also some themes to pay attention to. There's definitely a heavy industrial component to what's happening. We have GE tomorrow. On Wednesday, Boeing, so that's more of the aerospace group. Caterpillar, so you have some machinery coming up on Thursday, but also a lot of healthcare, biotech, energy stocks all coming out. So certainly encourage you to pay attention to what's coming out. We're going to focus on some of the charts that I've come out. Part of my process every weekend into Monday morning is to look at a couple hundred charts, try to get through the entire S&P 500 chart by chart, and I usually end up with a notebook full of ideas that are there. Let's hit on, and we're actually going to start in the materials sector. It's funny, there's so many different things reporting here. We're going to jump around quite a bit, but it's funny when you look at the chart of Newmont Mining, it's arguably gone from a period of distribution to a period of accumulation. A lot of stocks right now are sort of up and to the right. We're going to see plenty of those in a lot of different sectors. But Newmont is an intriguing one to me because gold stocks have been so out of favor, and things that are out of favor that start to work can often be an intriguing one just because there aren't a lot of people that are buying into the idea, pun intended. And so looking for some of those emerging opportunities sometimes can be compelling. So Newmont actually and gold stocks looking attractive and coming off a long stretch where they have not is potentially a very interesting one. Elsewhere within materials, we've talked about sort of the long-term uptrends. FCX with a good day today, up almost 7%, but it's sort of this nice base coming off of its 50-day moving average, and I think that could be setting up for much further upside. That's certainly a start to watch. And you also have things like IP and others that are just in these nice long-term uptrends. Things that are actually starting to turn higher that could be interesting. Albemarle actually comes to mind. This is a specialty chemical name, but peaked out in January and then really pulled back, lost its 50-day pattern of lower highs and higher lows, and then it made a higher low in March and then rotated higher. So when I'm looking at stocks like energy stocks that kind of look like this and are in a pullback, in a downtrend, the XLE actually looks like Albemarle through early March. When I talk about making a higher low, this is kind of the chart that comes to mind, something like this, right? The downtrend is in place, a tactical downtrend. It's underperforming, it's underwhelming, and you have a bounce higher. And then you, instead of making a new low, you make a higher low. This is why head and shoulders patterns look like, or inverted head and shoulders look compelling, because you're making a higher low. This is a Dow theory downtrend to a Dow theory uptrend. You make a higher low, you make a higher high, and all of a sudden this starts to rotate into more of an uptrend. So charts like that have actually improved and are starting to rotate a little bit higher, I think are interesting. CF is another one in the same group that's rotating higher. ECL, Ecolab, you can see it's a lot of these chemical names that are popping up on this sort of had been underwhelming and now starting to make a higher low, higher swing high. So those are ones that are not extended. They are not probably overbought. They have not been outperforming because they've been struggling, but now starting to rotate higher a little bit. And I think those could be some interesting ones to look at. I mentioned with REITs, I was actually struck as I was looking at a bunch of charts. Some of the ones that looked most interesting to me were in the real estate space. SPG, right, which is one of the retail REITs. And again, what it's done is it's just had this nice uptrend basing pattern, which means it's sort of rallied up and it's stalled here around 120 just today, closing right at that level, but rotating, trading above it during the trading session. This is after bouncing off the 50-day moving average a couple times. That could actually be setting up for a nice breakout to the upside. Sort of an interesting name. CBRE is another one that has already broken higher, but there are a lot of charts that look kind of like this in the REIT sector, in the real estate sector, which is probably why the XLRE or the IYR, whichever one you're looking at, is sort of in a nice uptrend up and to the right. Now, the relative strength has not been as impressive, the relative performance, but it's certainly been building some positive upside. Boy, there's so many charts I'd love to look at. Given some of the tech stocks that are reporting, and especially the FAANG names, let's go there next. So Enphase is is an interesting one. This is in a group called Renewable Energy Equipment that, arguably you could bucket in a couple different places. This group includes the solar stocks, battery name, like hydrogen names, and other things. Enphase potentially is breaking out of it. It looks a lot like the chart of Tesla, actually, where it's had a sell-off, and then you have this consolidation pattern of lower highs, higher lows, potentially breaking out of that to the upside. That's what I was looking at this weekend. If you sort of look at this consolidation pattern, is that resolving to the upside? It's back above the 50-day. The RSI is right at 60, which means if it can get a little bit higher, get the RSI above 60, this is more of a traditional uptrend sort of feel. Such an interesting way to, it's an interesting one to look at. Also random, I'll jump around a little bit, but IPGP is a stock that has certainly been a high flying name, this nice performance, and then it made a double top here in February, made a new swing low, then all of a sudden did not make a lower low, didn't touch the 200-day, now making a new swing high and a new swing low. That could be an interesting setup, rotating a little bit higher. Also worth noting, all the payment stocks are sort of are in the mix right now. Visa making a new all-time high. MasterCard MA is another good one. And again, these are just pretty good setups. They're not horribly overextended. They're not overbought like some stocks certainly are. And they certainly have been outperforming to a great deal. But I just like the rotation higher, and they're above two upward sloping moving averages. And that's always sort of a compelling pattern. PayPal is one that's pulled back to its 50-day after a nice breakout above there. So sort of found resistance at the 50-day, now finding support. And that could be just setting up for a nice rotation higher. And what I like about charts like PayPal is there's sort of a natural risk management in place, right? If you would be buying at something today, you could naturally look for support at the 50-day moving average, at the swing lows, at the 200-day, which are right around 220 to 230. So you have sort of a clearly defined downside risk, but the potential to rotate higher. So there are a lot of interesting ones in there. Finally, and I don't have time to go through much of these, but I'd certainly draw your attention to the semiconductor space. Things like Applied Materials could be rotating higher after a little pullback last week. Something like Intel, very broken relative to the other semiconductors, but some interesting charts looking at AMAT, AMD, CLAC, KLAC, and many others. That's all the time we have for shifting stocks. We need to wrap the show. The 3 and 3, 3 charts, 3 minutes. Here we go. Chart number 1 is the S&P breadth by cap tiers. We looked at this a little bit on Friday's show as we were wrapping the week, and it's just worth noting, when people talk about the market conditions, and I know all the arguments, can I give you signs of euphoric sentiment? Absolutely. Can I show you how small caps have not really been participating? That's a concern. Absolutely. Can I show you how semiconductors are not making new high while other things are? Absolutely. But there's undeniable the fact that the S&P is making new all-time highs, and that for the most part, the breadth is very supportive of that. You're seeing an expansion in new highs. That's a thumbs up. You're seeing these advanced decline lines, for the most part, make new highs along with the market. The one where you are not still yet is the small cap AD line. We may actually get above this today. It's not updated for today's close, but given the strength in small caps, I wouldn't be surprised if you break that this week at some point. We'll see. Chart number 2 is the U.S. Heavy Construction Index. This is the one of the top-ranked groups within the S&P Industrials list. If you look at the industry summary page, sorted based on their scooter rankings, you'll see this. I think it's at the top of the list, if I remember right. These are stocks you may or may not know. Things like Jacobs Engineering, PWR is another one in there. These are some of the better charts within industrials. This is a top scoring group, and this is why the XLI overall looks pretty good. You have a lot of industrials reporting earnings this week, and again, I think a big part of this theme, a big part of this play, looking at industrials and heavy construction, is the infrastructure play, right? Things like ETFs like PAVE holding up and doing well. And I think this chart continuing to go higher tells you the strength of that theme as we continue into the summer months. Finally, we have Tesla again selling off a bit here in the after hours. We'll see how things play out as investors digest earnings, but I think this is the exercise for much of this week, is looking at stocks like Tesla, looking at the message going into the earnings release, which I would argue is kind of constructive. You had the pullback in March, and now a rotation higher back above the 50-day. The question after earnings, does the 50-day hold below that? 600 would be the line in the sand for something like Tesla. Folks, that is our show for today. Thank you so much for joining us every weekday after the close for the final bar. As a reminder, let us know your questions. Shoot us an email anytime. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.